All right. Good afternoon, traders. Thanks for joining us for another partnered webinar brought to you by Shark Indicators. Go ahead and type a Y in the chat if the audio is coming through. Okay, awesome. And take a minute and look over this risk disclosure on your screen. Can everyone see that okay? Okay, cool. So my name is Ty. I'm one of the guys here at Shark Indicators. Just a brief intro to our company. We're a top Ninja Trader partner, and we've been in the industry for over 5 years now. Our trademark product, Bloodhound, is basically a trading engine for you to build, backtest, and execute any trade system you can think of. There's no coding involved, and it's already used by thousands of traders. So just a few words from our customers. Derek states, I think I would have quit trading if not for Bloodhound. Probably the best investment I've ever made for my trading business. And Dan adds, this quickly became my favorite tool. I now spend minutes what used to take hours coding. The new logic nodes are fantastic. Keep up the good work. So what we do for these events is we select top Ninja Trader partners to bring you variety and exposure to different trading methods and personalities. Each partner is successful and each offers a unique trading style. Many of our industry partners create their own trading strategies using our tools, which in turn allows you to trade them, enhance them, tweak them, making them your own systems when it's all said and done. So today we're focusing on trade automation with Daniel Rowe from Trade the Plan. Just a brief intro for Daniel. He began his trading career in 2007. Over these past 10 years, he spent the majority of his time developing and testing trade systems. By 2013, he found out what Bloodhound was capable of, and in no time at all, he began offering a Bloodhound programming service full-time, creating and testing custom strategies. So through developing hundreds of systems, he could sift through the duds and focus on those that he could prove valuable. So present day, he's now developed a trading methodology combining those proven methods, and the results speak for themselves. So without any further ado, I'm going to pass the mic and the screen over to Daniel Rowe.
Perfect. Thank you, Ty. Thank you for the introduction. Thanks to everybody over at Shark Indicators, Bloodhound, Blackbird. If you guys don't know already, Jeremy has, well, and the whole development team at Shark Indicators, they have developed some incredible tools. Can everybody see my screen okay? Looks like it's coming through kind of weird. Okay, there we go. All right, good. Hey, Ty, would you do me a favor? Would you make Clinton Kemp and Josh Bennett organizers as well so they can kind of help me keep an eye on the chat?
Yeah, absolutely. I'll do that right now.
Perfect. All right, so everybody hears me fine? Yeah, good. Perfect. Yeah, we got a lot of people. Wonderful. How's everybody doing today? I am exhausted. I've been working on this stuff for a while, trying to get all of it finished, and we have really created some incredible tools, and really I can't wait to show you. But before we get into all of that, let's go through the disclaimer. Obviously, trading is incredibly risky. Don't trade with money you cannot afford to lose. Don't trade with your lunch money. Don't trade with your rent money, because you will lose it. I don't know about you guys, but it took me an incredibly long time to get to the point to where I was actually, for one thing, able to follow a trading plan, but for another, able to figure out a methodology that, number one, actually had the potential to make money, but then be able to trade that methodology without making, horrible mistakes, doing all the things that we typically do that lead us to blowing an account. To get to that point was an incredibly tedious and difficult journey, and it took me years. I guess it took over 6.5 years, 7 years. So let's get into it. What I want to do first, I want to kind of give you a bit of an intro on myself, kind of how I got started in all of this, what I've been doing, what's kind of led me to the point where we're at now, and the development that we're doing. I've been trading a live track record. Well, sorry, I've been trading a live account now for just over 6 months. I started with an incredibly small account, a $5,000 account, just to kind of prove to people that, this can be done with a small account, and you can grow a small account consistently. And it's all about rates of return, so it doesn't really matter the size of the account if you're getting consistent double, triple digit returns. It's just a matter of time before you reach that exponential growth. So we'll get into all of that. I'll show you how I kind of put together these methods. The original track record that I did in Sim over a period of, I guess it was 18 months. And then now the live track record. And I think I'm something like 340 or 335 or something % in a 6-month period. So really nice return, but I've made some horrible mistakes along the way that could have easily been avoided. I was adding to losing positions, doing the types of things that I swore I would never do again. So I want to address some of those issues that we kind of fall back into, even though, maybe we have found something that works and we are trading a method that does have the potential to make money, but then we kind of slip back into these bad behaviors. So we're going to get into that, how we can automate some of those trade management rules that we tend to not keep, and how we can even actually fully automate the entries all the way through to the exit. It's a kind of semi-automation, but I'll explain that as we go. What we have today, I say today, this is going to be a 2-part presentation. There's really so much to go through, and I'm not really a marketer. I actually hate marketing. I hate doing these types of things, but I do love helping people, and I do love trading. And the amount of resources and money that it has taken to build these tools and this methodology and to do all this is enormous. And I have 2 full-time programmers. I guess it's a total of 5 employees now. So in order to keep the doors open, I have to market these tools. It's something that a lot of people tell me that I shouldn't be doing. I kind of agree that I shouldn't be doing, marketing a proven method that is actually making money for several people. It's probably not the smartest idea in the world, but that being said, I pretty much have to do it. So when you see some of the trades, I think you'll be amazed. So in this presentation today, we're just going to kind of do a glossary overview of the methodology, and I'm going to go through all the tools that we've recently rewritten so that we can now do this type of automation that was really never possible before. Okay, so I'm just going to kind of give a glossary overview, show you the tools, the track record, do a brief little demo in Blackbird, and then on Friday, we're going to go into much more detail and go through some of my live trades, analyze those a little bit, figure out some things that I could have done better, show you some of the rules that I've failed to follow, and how Blackbird can now do all of that for us automatically. So when you see Blackbird in action, I think you're going to be pretty amazed. This is probably the single most beneficial tool that I've seen yet hit retail trading, because it's such an amazing piece of technology, and it's so well written and put together. It's a complex tool, and it does some pretty incredible things, but the way that they've put together the documentation, if you can't figure something out, you just click on help. It takes you right to the page. Everything is laid out very, very thoroughly and clean. And what I thought was going to take weeks of learning really only took about 2 days. So I think you'll see that as we go on. So let me just kind of get right into it. Also, at the end, I'm going to give you guys a free piece of software. So let me just say this. Everything that we do, all of the development that we do, is designed around doing the best possible market analysis available and making that analysis as easy to apply as possible, and then also saving as much time as possible. So making it as efficient as we can do. And one of the tools that we've developed to shave off some of that added time just to get NinjaTrader up and running, connected to data feeds, workspaces loaded, all of that stuff is something we're calling the Ninja Manager. So we finally have a finalized version of that today, maybe tomorrow, but it'll probably be available tomorrow. I think there's one more little thing we have to work out, but I'm going to show you that, and then you guys can have that for free. All right, so let's get into it. I'm going to try to go through this very quickly so we can get right to the tools. So I went to school in Paris in France. I graduated magna cum laude from the American University of Paris in international business, and my best friend there comes from a well-to-do, wealthy family in Ecuador. And when we graduated, he offered me a job. I was best friends with he and his wife, and I knew his family pretty well. So they offered me a job when we graduated at working basically at the family fund, essentially. It was completely private money, and it was just a handful of people working this thing. So I came on board with that the end of 2007, and the guys were mostly trading weekly and daily charts, just looking at volume, basically Wyckoff method, Richard Wyckoff, and trend channels and median lines. So what a lot of people call market geometry. And I was completely brand new to all of this. I had no idea what I was doing, completely green. And I kind of convinced my friend to let me go off in my own direction because, yeah, they were getting some pretty decent returns, 10, 15, occasionally 25%. And when they had a bad year, not very bad at all. But I wanted to kind of do my own thing because I had started watching all these webinars, right? Getting into all of these marketing. Well, I'm sure most of you have spent a lot of money on trading education, right? Well, yeah, I did too. Probably over $150,000 in the past 10 years in software and education. Luckily, a large part of that was kind of sponsored for me. And, I was able to do all of this expensive education. I had all these different pieces of software. I went down the whole WD GAN road, going into, very esoteric kind of basic nonsense at the end of the day, stuff that you can't really apply on a chart. And, I went every single possible direction. At the end of the day, I did nothing but lose money. I kept at it. One thing would fail, or at least I wouldn't trade it long enough to give it enough time to see if it actually could work. We tend to move from one thing to the next, right? We try something, maybe we don't do very well with that, and then we move to the next thing. And none of us really ever completely prove one way or the other whether what we've just bought, we've paid for, we've been studying, whether it actually has the potential to make money or not. So how would you do that in the first place? Well, you would have to have, number one, either programming skills, or you would have to have your own personal programmer, or be able to afford a programmer and be able to write out specs for some type of a program. Just being able to write out the specifications for a trading system is quite difficult. So most retail traders are not ever going to go down that road. They're not going to do any back testing. They're not going to do any programming, and they're going to believe what's been taught to them by all of the so-called gurus of trading. And it's unfortunate. I mean, we just haven't really had the resources available to be able to do the proper vetting and testing until Bloodhound. All right. Needless to say, that was in 2007 when I was at that private fund. By the middle of 2009, I had to go home. We had lost so much money, a pretty good portion because of me, because of my ineptitude. And, that was in the crash of 2008 and 9. So by the middle of 2009, I was back in Florida, continuing to work at this, continuing to, test systems, continuing to buy different software packages and trade those, joining different trading rooms and all that. I found Bloodhound, like Ty said, I think it was middle of 2013. And it was a dream come true for me because I had been wanting to do all of the testing of these certain systems that I had been trading for the past 7 years. Or at that point, I guess it was about, six years, something like that. And with Bloodhound, I was actually able to do that. And I picked up Bloodhound and ran with it. By the end of 2013, I was already offering a Bloodhound programming service. And I know a lot of you have worked with me, where I would basically build a custom Bloodhound template for whoever wanted one. So I did that for about 3 years, I guess, 2.5 years. During that time, I found that most of the retail trading group tends to work with the same types of systems. It's common basic technical analysis, a bunch of moving averages and oscillators and, swings, all types of different technical indicators based on some type of equation. Well, I found out pretty quickly that no matter what type of indicator, there's no special oscillator, there's no special moving average. They all are, variations of the same theme. And when you start adding a bunch of rules into a mechanical system, typically the more rules that you add, the worse the performance of the system. So those mechanical systems that really did have the potential to make money were typically very simple, with a few number of rules. Working with a few people along the way that, I was pretty certain were making money, analyzing their methods and all of that. The guys that were really making money were trading discretionarily, however, not necessarily with fully mechanized systems. So going through all these different mechanical rules and indicators, figuring out, what was useful, what's not, I put together my own set of methods. And the main thing that I basically went back to what I knew worked based on personal experience, which was volume analysis in a type of a Wyckoff style, and market geometry, trend channels and median lines. So once I started doing that again, piecing it all together with market geometry and volume and adding in price momentum divergence on the faster time frames to confirm the areas that I was trading on the larger time frames. Once I started building that and piecing all of that together and trading it in a sim account, the results were just incredible. I mean, I'm going to show them to you. You probably won't believe them, but you will believe the live results because they're live and they can be verified. So when it came down to it, looking at all the different volume tools, we were basically in the dark ages just a couple of years ago when it came to proper volume analysis. I know people have gone down the road of order flow analysis comparing the bid and ask and doing all of that. That is useful maybe for scalping, but the way that I'm trading, going for very high reward to risk trades where I'm trying to make, at least 5 times what I'm risking, order flow doesn't really help me very much. What does help me is looking at the total amount of volume per bar, but not using true volume, using something called relative volume and relative density. And I'm going to show you that in a minute. It's just a much, much better way of doing this volume analysis and incorporating the ranges of the bars, the size of the bars relative to the previous bars, and all of that. So the tools that we had for volume up until this point, were pretty limited. Yeah, you did have some pretty complex stuff with order flow and volume profile. But again, like I said, that kind of stuff wasn't really helping me. Volume profile to some extent, but not necessarily order flow. So I started out, hiring some programmers at an hourly rate and basically spending tens of thousands of dollars having these tools programmed, and eventually just, found it was much more economical to hire a couple of programmers full time. And I've been working on developing these tools ever since. And my goal has been to get all of this stuff capable of being read in Bloodhound, and now that we have Blackbird, automated in Blackbird. So that's the road that I've been going down. Now, I'm not after complete, full 100% automation. There still has to be some level of discretion involved. If you want to be a good trader, if you want to make money trading, you have to become a diligent, very good discretionary trader. You want to retain some level of discretion in your trade selection. You can automate a lot of those different pieces, but for me, what I found, I want to retain some level of discretion in trade selection. Okay, I don't want to automate every single signal that comes through. All right, so that's what I've been after, and the goal is to, through this trading room that we're now doing, to find some guys that are actually making progress with this, are growing a sim account and then a live account, and then work together trading our money. I was going down the road of looking into developing a fund, but the amount of regulation involved in that is just ridiculous. So I think we're going to do kind of like a top step trader kind of a deal, except not as rigid, and probably not working with as many people. And of course, the people will have to be trading our methods. All right, so that's a little bit of a history. The main thing that we do is market geometry. So let me just kind of describe the method a little bit. We start with identifying the areas that we want to trade. So what you see here is an hourly chart. Maybe some of you are completely brand new to trading. You have no idea what I'm even talking about right now. What we do is we look at multiple time frames. Okay, so we'll start with, say, a 4-hour chart. This is a 1-hour chart. We'll start with a chart 4 times this size. Identify the trend, draw in the market geometry using the major swings, major swing highs and lows, and finding the areas where we want to trade. I don't know why the markets are the way that they are, but believe me when I say that they move in geometric patterns. They just do. I mean, I'll prove this to you here shortly when we just pick up a random chart and start drawing on it. That's the way the markets work. And when they put in major reversals, the market puts in recurring patterns at these major reversals. All right, patterns, number one, in the volume, but also in the price action. Okay, I'm going to get into some of that here in a little bit when I go into volume divergence and how we kind of confirm the areas, but that's the idea. We want to put together the market geometry across the multiple time frames, identify where those areas are coming together, where we have a confluence of areas, and then using the volume and the relative volume and the price momentum divergence on the faster time frames. We want to see the market slow down into the area. So for instance, right here, if we were trading this as a correction, the market has broken up out of this last downsloping channel here, right? It's broken up and out of it, and then it's pulled back to the channel. This is what we call a kiss goodbye. All right, we actually programmed that into the tool. This is the toolbar that we use. I know it's overwhelming looking, but this is probably the most magnificent programming other than other than Blackbird and Bloodhound. This is probably the most advanced programming available for Ninja. So I'll go into how we use this in a minute, but what we want to do is identify that kiss goodbye line specifically, especially inside of Bloodhound and Blackbird, for a specific type of a trade setup. So we added that in to the code so that we could single out that line. So with the latest developments in our tools, what we can do now is access all of the values of these lines. We can attach orders to the lines. I can attach orders to these overthrow areas. I can identify when any bar is touching any one of these lines specifically, or when it's touching a group of lines. Let's say if you want to identify this bar right here that's touching the kiss goodbye line and the lower median line at the same time using the same pattern, we can do that as well. So with this latest release, we are able to do all the things that I've been trying to achieve for the past 3.5 years with Bloodhound. So we're now able to do that. We're able to actually read the volume signals from any chart in real time in Bloodhound and Blackbird, as well as the divergence indicator. So I'm kind of jumping around all over the place, but there's really so much to this that sometimes I kind of get lost in trying to explain it. But what we're doing is we're trying to identify the areas in the market geometry and then confirming those areas with the volume and the divergence. So again, right here at this low, if this is a setup on the hourly, a corrective low on the hourly, we would have a set of rules for the subsequently faster time frames to confirm that swing low. So we would want to see, in this case, this is only a very small correction, maybe 10 bars. I wouldn't necessarily require volume divergence, but I would require a selling climax into that, followed by a churn bar on the 5-minute or the 2-minute. And then potentially, but not necessarily at this swing low because of the size of it, divergence on one of the faster time frames. Now, when we're talking about a major swing low like this, we have a big A, B, C down here. At that low, we would require divergence on the 2-minute, the 5-minute, sorry, the 2-minute or the 5-minute, or one of the faster tick charts, right? Because we want to see price slowing down into that area. And you can really see that just by looking at the size of the bar. So we have a big selling climax here, and then a narrow range bar. You see the wicks at the bottom? That's indicating that you have some demand coming in, right? You're coming down really wide-ranging bar, then a narrow range bar, closing up off of the lows to clear indication of demand coming in at that area. So when you see all of this combined with all of the tools across the time frames, there's really nothing like it. I mean, it's pretty incredible. So before we go any further, let me do this. Let me show you the track record just to kind of prove the validity of what I'm talking about here. This looks ridiculous. It looks fake, really, frankly. If I saw this, I would think it was fake. This is the performance that I did in Sim. Now, granted, trading a Sim account is not anywhere, well, I say it's not anywhere close. Typically, you would expect your live results to be something like 25% worse than your Sim results. You want to be able to trade a Sim account as if it were real money. That's the idea. That's the goal. You want to prove your methods using a fake account, at least double or triple that account, trade it for, about a year, get to the point where you're making consistent returns with a fake money account. And if you're actually able to treat that fake money account like a live money account, then you can go on to trading a live account, which is what I've done. So I've done my due diligence. I've done all this properly the way that you're basically supposed to, and now it's kind of all come together for me. So this track record here, let me blow this up a little bit. Not even sure how to do that with. There we go. Not used to Internet Explorer. Okay, what was that? So I started with a $10,000 account on March 1st, 2015, and then traded this to April 1st, 2016. It's ridiculous. I mean, it's $285,000 in 13 months from a $10,000 account. And that's trading these methods. This is, who would believe that? Nobody would believe that. All right, so I'm not going to waste any more time on a sim account, and let me do this before moving on. Anytime you show a sim record, you want to show the disclaimer here. Let me do that. Hang on one second. This is not working now. Fantastic. Right, so that was a fake money account. I was trading it in real time, but it was fake money. So the results were simulated performance. All right, now what I want to show you is my live performance. And I have made some pretty ridiculous mistakes, actually, trading live. So trading live is quite a bit, come on. I don't know what happened. I guess my computer kind of reset somehow. Trading live is just a nightmare of a head game. And, some days I'm fine. It doesn't bother me to take a loss. And then other days I just have some kind of mental block against taking a loss. And I got into kind of a rut there for about a week and a half where I was just making mistake after mistake, day after day. I was adding to losing positions, putting on way too many contracts, and just taking major hit after major hit for, it was about 7 trading days in a row. So I'll show you that here in a second, but I started with a $5,000 account. That was on November 16th. I didn't really start trading it until the end of November 2016. And yeah, there I made $1,000 or $1,100 the first real trade, and then just kept growing pretty quickly. Of course, I'm only trading about 3-4 hours a day, and developing the tools and putting all this stuff together in the afternoons. So I got up to, let's see, 11,500 on my birthday there, the middle of February. So by March, I was at 14,000. Okay, I lost a little bit in here. Never really lost very much at all until I got into this negative drawdown here. Just a total blunder. So I got up to 18,600 by the end of March. Okay, I was doing really well, and then boom, I had a really bad day the end of March, and that kicked off what became a nightmare for me. So I was at 18.6, went down to 17 in a day, went all the way down to 14. I mean, I say it's a nightmare. Relatively, to the size of the account, that was a pretty big drawdown. It's from, what was it, almost 19 down to 14. So, yeah, pretty sizable drawdown in a matter of 2 weeks. But then I recovered pretty quickly and made it up to 15 by May. 15, dropped back down to 14. So it took me a little while to kind of get out of that bad behavior and got back up to 18 around the end of May, 17.7, and then had a couple of really nice days in here, and now I'm back to, or I'm up to 22,300. So it looks like my high water mark was 23,000. So that's pretty good. I mean, granted, it's not several $100,000 or several million, but we're talking about starting with a $5,000 account. So that's trading live. I have a trading room. Obviously, not every trade that I took here was taken during the trading room, but the last trade that I took in the trading room was, what was it? It was a big NASDAQ short. It was right here, which I think I netted like 1,400 bucks from. And that was the last trade that I took in the trading room. So we've been kind of shut down for the past week and a half or so while we build out, kind of put the finishing touches on the software, all right, which I want to get into now. So I just wanted to kind of show that to you. This is a live account. I would welcome an audit, no problem with that. Just wanted to show you guys that, it is possible. I don't know of anybody doing this. No other marketer. And again, I say I'm not a marketer. I'm not good at marketing. I don't really like doing these presentations, but I am passionate about trading, and I want to make something available to you guys that's actually useful, because there's so much stuff out there that is just, there's really no way to make money with it. You spend what, 10 grand on a really good, well, what you think is a really good system, and then you commence to blowing 100 grand in the next couple of years. So where's the value in any of that? Again, I say it's very expensive to do this type of development that we're doing, and that's really the main reason why I am making this available, so that I can afford to keep doing it, basically. All right, so let's kind of go over some examples in the market geometry. This is just connecting low to low, and then it finds this swing high automatically, and the market comes right up to the median line on a nice ABC correction, and then drops again. This was actually a lot of stuff came together at this high in crude. Yeah, this is another example where you have a confluence of areas in the market geometry. So this probably looks like a mess to some of you, but this is really the way that the market works. I mean, we're looking at a bar chart. Each candle is a 30-minute bar, and you're looking at all of the traded prices for crude oil in a 30-minute period with each bar. And the way that the market unfolds over time, it traces out these channels. It just does. I mean, you can do this on pretty much any market and see how it conforms to these trend channels and median lines. And when you're combining all these lines across multiple time frames and then finding the areas where they intersect, those are the areas where you get these really major reversals. And that's what we try to identify. We want to trade with the higher time frame trend. We want to identify corrective patterns. So we do use the patterns that are in the Elliott wave theory when it comes to identifying corrections. There's about you know, 13 basic patterns, and there's variations on how those look, but this is one of those types of patterns here. You have a big 5-wave move up here, or you could say it's 3 waves up, 3 waves down, and then 5 waves up for the C wave. So the market puts in these swing highs and recurring patterns that you see over and over and over at these major areas in the market geometry. So another example, this is the kiss goodbye line that I was telling you about. When you break out of a channel and then pull back to it, this is probably one of the oldest chart patterns ever written about. I think it was Edwards and McGee wrote about this in, what was it called? Technical Analysis of Stock Trends. It was one of the first books that I read on trading. So we break out of that down sloping channel, break out of it, pull back to it, right to where? Right to where all 3 of these lines intersect. You see that? Just drawing this one from high to high. It finds that low automatically. You draw this one from low to low. It finds the high automatically. And they all come in right there. And then the market screams to the upside out of that low. All right, so how do we confirm these areas though? I mean, we can now read all of these areas inside of Bloodhound and Blackbird, but how do you know when the market is actually going to turn from one of these areas? Or how do you at least put the probabilities of the market turning in your favor? Well, we do that with something called relative volume and density. Relative volume and relative density. So this is, well, let me just kind of explain it briefly, just so that you have an idea as to what this really is. What we're doing with this is we're looking at, rather than looking at true volume, raw volume, we're looking at the amount of volume that transacts during this bar. So this is a 5-minute bar of crude oil. It's the 4 a.m. to 4:05 bar. So what we're doing to get this signal here is we're comparing the amount of volume, the number of contracts that trade during this 4 a.m. to 4:05 bar over the past 10 days, and we're averaging those together, let's say 10 or 12 or 20, and then we're comparing how much volume has transacted in this current bar relative to the average volume for that time period. Okay, we're doing that with the volume and the volume per range, and then we're comparing those to the previous bars. Okay, so we have major, well, let me say it like this. So there's 4 basic signals that we have now. We've completely revamped this. Basically what I did is I spent a couple of weeks going over different combinations of conditions and different parameters and settings within the code. We completely rewrote the code, optimized it, and just added a totally different set of conditions for this new version, and it's way more accurate. And what you see here is an extreme churn bar. So what that is, it's an incredibly high relative density bar, which is very high volume per range. And when you see that at a low, that indicates that demand is coming into the market. Let me kind of explain it like this. You see this big down bar here? That's a selling climax. Okay? You see how the bar in the middle is colored kind of a hot pink color? The middle part of the bar, which is the fat bar in the subpanel, that's looking at the volume per range. Right? The outline of the candle is looking at the volume. So we're looking at both, and independently and kind of combined into different signals, the volume and the volume per range. And in this case, the selling climax is such high density, such high volume per range, that it's both a selling climax and an extreme density bar, which means that on that bar, even though it is a selling climax, you've run into some intense demand, and the market, as you see, stops on a dime and turns back up. Just because you see this doesn't necessarily mean that the market is going to reverse from that spot. If you're at an area in the market geometry, then chances are it will reverse from that area. All right, but what we look for, one of the main things that we look for is a pattern within these signals. And one such pattern would be volume divergence. And I'll show you some examples of that here in a minute when we go into some live charts. But these extreme spikes throw these little drawing objects and basically a support line from the extreme spikes in the volume. And then those lines become support and resistance in the future as well. All right, so I could spend a day talking about this volume tool, but the update is really pretty incredible. I'll show you some signals here in a minute. This is a 2-bar pattern. This is something we look for a lot. This is a selling climax followed by a churn bar. I know these terms are probably, if they're new to you, maybe they're a little bit, I don't know, maybe you're kind of scratching your head right now, but we're just trying to associate names with different patterns in the volume. So a churn bar would be a bar that's very high volume per range, and it has a narrower range than the previous bar. So in this case, you have a big selling climax, very wide-ranging, high volume bar, followed by a narrower range bar on, again, very high volume and very high density, very high volume per range. Okay, and that stops the market on a dime, and then it turns up into the next high. And there you have the next extreme spike. Here's another churn bar at the low. It's another extreme churn bar. These are probably some of the most accurate volume signals I've seen. And this is, again, another extreme climax, which is an extreme density. The middle of the bar is colored with the density. The outline of the bar is colored with the volume. Another major churn bar at a lower high, big selling climax to end the move. And here, another churn bar to end that move after a selling climax here. This is a volume divergence signal right here. I'm going to show you several examples of that here in a moment. All right, we also have volume per second. Basically, this tool, this volume tool, it has 6 different inputs. So you can make it to show relative volume, relative density, raw volume, range, or volume per second. Okay, the new volume per second has a couple of different signals in it. Extreme volume per second, and then just very high volume per second. When we see very high volume per second, it's typically associated with a lot of market orders coming into the market. So for instance, on a crude report or something like that, you would see extremely high volume per second. One thing that we see at a lot of the areas in the market geometry that actually produce major reversals is this very high extreme volume per second. Typically the last bar to touch the area. And this is something we see pretty regularly at the major turning points. Again, this is just the volume per second. Let me kind of get going here so I can get through some of these examples. This is the next tool that we have. So we have 3 main tools. We have the toolbar, the volume, and the divergence. With the toolbar, we create all the areas in the market geometry across the multiple time frames to find the areas where we want to trade, and then we use the volume and the divergence to confirm those areas. Okay, and all of that kind of through the lens of different patterns. We want to see different patterns in the price action, different patterns in the volume, and divergence, momentum divergence, you want to see a slowing down of price into those areas, we see these types of price action patterns together with the momentum divergence. So this is the Divergences Pro tool. We can actually bring in different instruments into this tool so you can compare, whatever you want to do, basically. The euro currency futures with the pound. You can put it basically any instrument. You could have the ES and tick, or NASDAQ and the tick Q. With the divergence, though, we added in several different essentially patterns in order to help us spot some of these different price action patterns more quickly and clearly. One of those would be the 3 drives to a low or 3 drives to a high. In this case, you have a yellow divergence here. This is double divergence. So this is momentum in the subpanel, where we're looking at the speed of these bars moving to the downside. When we're coming into an area where we actually want to take a trade, we want to see the market slow down into that area. Okay, so this would be, one look to what we would want to see depending on the trade type that we're trading. For example, one area where you would not expect to see divergence would be one of the trades out of the crude report. Typically with the crude report, they tend to move it directly into a major area, stop on a dime, and then major reversal. Or if you've already reversed out of an area recently, then they use the crude report to push it very quickly out of that major area. I'll show you a couple of examples of that where that's exactly what's happened the past 2 weeks in a row. Actually, here, this would be a perfect little correction, little A, B, C correction with momentum divergence at the final swing high. Undoubtedly, that was a volume divergence signal there as well. Actually, it was a volume divergence signal there. I think I have it right here. No, this is the one right before that. I'll show you some of these other examples here shortly. But yeah, this is, I'll show you an example in Blackbird where this is kind of a trade setup that's happening while I'm already in a trade from this swing high. So yeah, that was 2 volume divergence. Both of these major highs and lows were volume divergence. Let me just show you that right now, because that really is about the main and most important thing. And hopefully, you get to take something away from this. I know my presentation skills may not be that good today, but one thing that I would like you to leave with is knowing at least one pattern that you can use in your trading, and that is this volume divergence signal. So I've reprogrammed these volume divergence bloodhound templates now that we can access the volume signals and the divergence signals without actually having to perform those calculations inside a bloodhound. We can build out some pretty complex signals in bloodhound without slowing Ninja down at all, really. So none of these calculations have to be performed on this chart or inside a bloodhound. Essentially, all we're doing is accessing the values of the data series for the signal. So this volume divergence signal is essentially what you're looking for is for a short, is a big buying climax, very high volume, some kind of retracement in the opposite direction, which is essentially, in this case, a sign of weakness. So you get the big buying climax, sign of weakness, and then another push to a new high on much lower volume. So here you see decreasing relative volume here, ending on a really nice major spike in the volume, It's also a churn bar, meaning that you've definitely hit resistance. Supply is coming into the market there. It's also at a major area in the market geometry. And that's where, well, using this pattern, this is how we confirm, for instance, if we're trading a setup on the hourly chart, we would require that we have volume divergence on the 5-minute and or the 2-minute. If we're trading a correction on a 4-hour chart, we require volume divergence on the 5-minute. Okay, so this is probably, I would say this is the single most important confirming signal that there is. Not just for me, but in general. This is the way the market works, really. So you see this swing low right here? This is a really good example. This is actually after a major low. We get a really nice sign of strength here. Basically, every single one of those bars is straight up. I don't think there's a single down bar in there. And then it goes sideways into a perfect little correction, actually. That is pretty perfect. Huh. Must have missed that one. Yeah, you see this? So I'm just, major high to major high. And look at this, right where the two lines intersect. This is the center median line with the channel line. Yeah, center median line with the channel line. You get a big selling climax followed by a narrower range. It's still a pretty wide-ranging bar, but it's smaller than the previous bar. And it's incredibly high volume. The volume, even though the bars are so wide-ranging, they're such huge bars, you have so much volume that even when you divide the volume by the range of the bar, you still have incredibly high volume per range. And that's a sure sign that you have demand coming into the market there. I don't know how people trade without volume. I mean, really, it's the single most important confirming indicator that we have. And I see, few people actually using it, or at least using it properly. Price is created by what? It's created by transactions, people buying and selling. So it's actually that buying and selling process that creates price. So really price is a derivative of the transaction process of volume. So I would say that, volume is really first order, and then price is a result of that. And then any kind of indicator that you put on price in an attempt to find support and resistance when you're, doing these strange equations and all these moving averages and oscillators and all this stuff, it's twice removed already. So in order to make good trading decisions, you have to have the best data information possible. So why are you going to take, good price information and then turn that into another data stream with all these fanciful equations and all this stuff? So the further you get away from price with all of these different indicators and rules and stuff, basically the worse the performance of your trading is going to be. The only oscillator that we're using is momentum. So with the momentum, all we're interested in doing is identifying essentially the speed of price and then the areas where price action is slowing down into an area. Okay, that's really all we're using it for. Price itself will tell you all that you need to know. You don't need a bunch of squiggly lines all over the chart to make sense out of what is going on. If you have an idea as to how to read volume, the market geometry to define the areas that you're wanting to trade from, and then some sense of market structure and patterns, for example, this being a very clean and clear corrective pattern, and that's really all that you need. I mean, here you've got a perfect example of volume divergence. You have a big selling climax, huge amount of demand coming in, nice sign of strength up here, and then we come back down to test this area, and we do that on decreasing volume here, you see? And that's really what it's all about, is identifying where supply and demand is coming in. And so many people have so many different misconceptions of supply and demand. Some people would say that, okay, well, demand came in here, right? Because the market stopped here and then turned up. So that means that if the market comes to this area again, we'll get demand out of that area again. Well, that's not the way the market works at all. Supply and demand is a function of the previous areas of supply and demand. That's why the market geometry works. You're combining, essentially what you're doing here is you're identifying the area where supply came in. That's the swing high here. About to lose my voice. This is where supply came in. This is the next major spot where supply came in, right? What is the area between these two highs where demand came in? It's right there. So where is demand likely to come in again next? Right there. You see? So that's what it's all about. All right. So this is the triple divergence signal. So with the momentum, again, we're looking at measuring how fast price is moving into an area. And this is one of those patterns that we're trying to identify based on the momentum. And that is kind of a staggering, it's not necessarily a 3 drives to a low, but it is that kind of overlapping corrective move into a low. Here you have a big, nice impulse move up. The waves are not overlapping. You have extension here. You have 1, 2, 3, 4, 5. Nice, clean third wave. Kind of a rounded look here. You're losing momentum. And then you get the sell-off, right? And then all these waves start to overlap. You get that divergence at the low, loss of momentum, and that's the end of the correction right there. So this is the triple divergence signal. Right, so this divergence tool is pretty incredible. It's a massive amount of code to get this right. Essentially, I know why nobody has created a divergence tool that finds, every single case of divergence and works the way that it's supposed to all the time, because it's incredibly difficult to program. But after about 2.5, 3 years, we finally have it working right. So just some more examples of divergence. All right, let's do this. Let me go through how we can kind of combine all of these tools inside of Bloodhound. So let me delete this. I think you guys are really going to like what I have here. Anybody use Bloodhound quite a bit in the room? I'm sure a lot of you guys have been using Bloodhound for a while, right? Have you ever wanted to read the signals from one chart onto another chart? Because maybe the template that you had was, hang on a second. Sorry, somebody was telling me that the webinar is over now. Huh. Weird. Anyway, what we can do is we can read Bloodhound signals from any chart now. So what we've done is we've combined this type of a reading system, signal reading system, using several different indicators. What we can do, we can access all of the volume signals from any chart. We can access all of the divergence signals from any chart, all of the market geometry areas from any chart, and actually Bloodhound signals from any chart. So let me just show you this in action here. On Friday, we're going to go into way more detail about all this stuff. I do want to kind of show you how we combine this in Blackbird here in a second, but let me show you this real quick. All right, I'm just going to do a simple 1-minute chart. 2,500 bars, okay. All right. Now then, what I can do, I'll add Bloodhound to the chart, and I can access that signal out of Bloodhound now. This is pretty incredible. I've been wanting to do this for about 4 years now. So we've designed an indicator called Bloodhound Reader. You select the workspace that you want to access Bloodhound from, and then you select the chart that you want to access. We want to access that 5-minute chart. Let's go ahead and make it a template. So I'll just name it 5-minute chart. It's actually 5-minute volume divergence. And let's see, 1 is positive, -1. Look at that. Is that crazy or what? Pretty incredible. So what I can do now, and this is what is making Blackbird really just incredible for me right now, I can access all of these volume divergence signals. This is the most powerful reversal signal that we see over and over and over. When we're looking at identifying, let's call it the operative time frame chart that a correction is occurring on, we're trying to identify a correction occurring within, let's say, 35 to 100 bars, 110 bars, to identify the setup chart, the operative time frame. When that setup chart, when that operative time frame is a 4-hour chart, 2-hour chart, or an hourly chart, this volume divergence signal is, I would say, 80% of the time what you're going to see to finish the move. The big reversal, continuing the trend, is typically going to be this volume divergence signal. And I can access that signal from any chart now using one simple solver. Okay, so I can build, complex sets of conditions using the market geometry, the volume divergence, and momentum divergence, and then bring that into Bloodhound and Blackbird just using one simple solver, running no calculations, and thereby not slowing Ninja down at all. So I can have these complex workspaces, basically as many charts as I want now, with Blackbird on every workspace, and everything runs, as if Blackbird's not even there. So previously, when I was using Blackbird, trying to bring all of this stuff into kind of a trade automation tool that's having to run all these different calculations from all these different time frames, all these different indicators. Ninja's only using one core, so it kind of slows everything down and locks Ninja up when you're trying to do too much. But now that I don't have to do any of those calculations inside of Bloodhound or Blackbird, all I'm doing is accessing the signals. It's basically like it's not even there. And it runs very, very smoothly. So let me show you one more example. We had, where did we just have that? Right here. So this is really cool. I'll show you this and then I'll show you Blackbird. So I told you we had all these different market geometry readers now to be able to read all these different signals. Well, I developed one more to be able to combine, essentially, to know when a bar is intersecting two lines that are created by the same set of market geometry, the same pattern, basically. So what we have done we have all of these different signal readers, right? So this one, the market geometry signals reader, I'm going to read that 5-minute chart. I'm going to use the bars from the source chart. Just set the threshold to 0. I can set the slope, whether the channel line is above or below the baseline, and then activate whichever sets of lines that I want. This is the signal that I want. I want to know when a bar is touching the median line and its channel line. Okay, I can do it from the same set of market geometry or 2 different lines or both. All right, so pretty versatile with what you can do here. I want this one specific pattern. I want the center median line and the channel line. And that is from 5-minute I gotta load some more. So this is now enabling us to essentially program out inside of Bloodhound every exact setup that we look for. So, you know, some might look at this and say, well, wow, this is a pretty complex methodology. Does it have to be that complex to still make money? And I would say whoever said that trading should be simple, I don't think they have any idea what they're talking about. It's not simple. It's the most incredibly difficult thing in the world. And when you try to keep it simple, well, let me ask you guys, are you keeping it very simple and making money? The markets are not simple, right? In order to know when the market is going to be able to anticipate when the market is going to put in a major swing low or high, you have to understand how the market operates and what these major turning points typically look like. And if you don't have some understanding of the way that the markets work and how these patterns unfold, I really don't see how you're going to have returns that are significant. Maybe you can come up with something that's, you know, going to get you 10 to 15, maybe 20% a year. I'm wanting to get 6, 7, 800% a year. And as far as I can tell, the only way to do that is really to understand the way that the markets work, to use market geometry and volume, and to do that across multiple time frames. If you're trading one time frame and one time frame only, and you're looking at, you know, you're basically trading with constant stop loss and target values, the same values all the time for every trade, then you're leaving a lot on the table. It's very difficult to make money trading one time frame and, you know, only one type of a setup or something like it. It's very difficult to make money trading is what I'm trying to say. And although it may look complex what we're doing, what I'm trying to do now is to put all of these rules, all of these trade types into Bloodhound so that when they occur, you at least get notification from Bloodhound, and then you can choose to automate that, automate the trade management of that, and basically decide when you want to take the trade, when you don't, which type of trade is setting up, and let Blackbird manage the trade. So anyway, that's this pattern on the left showing up on this chart on the right. So I have combined a lot of these signals already, and I've been testing in Blackbird for a while now. We just got a new version of Blackbird which allows you to scale in now, and I've been working with that. I don't have a video of that yet, but it's pretty cool now that we can actually scale in and out while we're already in a trade. And I don't know, working with Blackbird these past couple of weeks has been, I don't know, I'm like a kid in a candy shop. This is a really incredible tool. Even if you're not automating your trade setups, you can still use it as a discretionary kind of a advanced chart trader, and you can create some really incredible trailing targets, trailing stops. But let me kind of show you one of the things that I put together. So like I told you, we aim to identify the operative time frame, right? Well, this is the set of rules for a 20-minute setup, a setup that's occurring on a 20-minute chart. So we then have subsequent rules for the 2-minute, 5-minute. You see I have volume divergence in there. I have some rules from a 200 tick chart. What I do is I try to identify the trend, the direction of the market on the higher time frame, and then where are the next major areas that I want to trade. And I try to identify the market structure. Yeah, I do use Elliott wave to some extent, but you don't have to, know that well to still use this and be successful. But what we do is we try to find the major areas. Here you can see me doing that. Let me slow it down for a second. You see what I'm doing? I've identified the major swing highs and lows, and then I'm drawing in the market geometry. All I'm doing is I'm connecting the major 2 swing lows here, and then I'm connecting the major 2 swing highs. And those areas that are produced from those major swing highs and lows, supply and demand, right? Supply coming in at the highs, demand coming in at the lows, those are going to give me the next sets of areas where the market is going to experience more supply and more demand. That's the way that the markets work. They unfold in these kind of, may not necessarily look like a geometric move, but it is moving in geometric patterns. So the next major area to the downside is where? Well, it's this big, massive trend channel way down here. Next major area up is where? Well, we're essentially at it right now. That's this big downsloping upper median line. And you've got a perfect A, B, C right into that area. This is one that I missed. I was actually thinking that we were going to do a higher low and that we would potentially go back up to new highs here. That was on Friday. So the market was right here because we had essentially rolled over to the next contract that day. Excuse me, and we had kind of put in a lot of support right here, and we found, well, it turned up pretty quickly out of that low. So I was thinking, well, if that continues, then we may just break out of this downsloping channel and start heading back up. Well, on Monday, this trade set up before I came to my computer. I had everything marked up. I had the areas all ready to go, but by the time I sat down, the big volume divergence signal had already happened right at all these confluence of areas, and I missed it. So if I would have had this system built out, I could have turned it on, let Blackbird completely manage the entire thing, and I would have been good to go. It would have been flawless. All right, so now that I have all this stuff programmed out, doing this type of trade automation, at least automating the money management and the trade management and those aspects, is pretty feasible. Before, I was looking at automation thinking, well, from the work that I've done and the way that I'm trading, it's so discretionary, and you have to do this type of market geometry work manually. Maybe automation is something I'm really not going to be able to do, but as I've been working with Blackbird these past couple of weeks with these readers, this signal reading system, I can program out every single detail of the trade setup, the entry, all the way down through to the exit. Okay, so what you're going to see me do in this example, I'm going to kind of retain some level of discretion by basically I'm going to send in the profit target and stop loss at a fixed amount. And then that gives me time to then figure out, okay, well, where's the next major area that I want to actually trade down to? And I'm going to take a color and I'll recolor a line. And when I recolor that line, after a couple of bars, I have a delay built into Blackbird. After a couple of bars, the order will attach to the specifically colored line. Okay? And I can do multiple different colors. I can have one color for the first target, one color for the second target, another color for the trailing stop loss. I can do as many of those different colors as I want. So it depends on basically how many contracts you're trading, whether you use more than just one or two colors. So you'll see this trade go in here in a minute, and then you'll see me start to kind of assess, okay, well, where's the next major area that I want to get out at? All right, so here, this is the 20-minute chart. I've now marked up the 2-hour chart. Let me just explain this for a second. All I've done is connect the two obvious most major highs on this 20-minute chart. See, the previous one had volume divergence, right? At a major turning point, volume divergence on the 20-minute. Look at these major lows here. Double divergence in the momentum. It's completely going sideways. And it's also volume divergence. Big selling climax here and here. Sign of strength, comes back down, tests those lows on lower volume. And then basically by here, the volume of that contract had dried up. And when it reopened, we were on the August contract. Okay, so this is one pattern right here in the market geometry. I've connected the two major highs. It finds that low automatically. That's the lower median line coming down. And then this is the ABCD projection. I'm not going to try to teach what all of this means, but this is a very specific type of a pattern. This low right here is exactly 2 times the length of this move from high to low. That's what I mean. The market moves in geometric patterns. It just does. You have the warning line here, the 100% warning line of the channel, intersecting that lower median line right with that volume divergence signal, putting in the end of that swing. And it's 5 waves. So you see these things occur over and over and over. And what do we have here? We have a typical A, B, C. We're just looking for the 5th wave up now. We've got 1, 2, 3, which is why you don't short that big buying climax right there when the market is screaming to the upside. You wait for that sign of weakness and then go back up and test the high, actually making it to the areas. We've only got about 5 more minutes here, and then we'll call it a day. While this is playing out, let me go ahead and get you guys the next webinar registration. That's the link. So we'll come back on Friday. I should be a lot more lively. I know I'm probably sounding kind of monotone and stuttering and whatnot. I'm just incredibly exhausted, guys. I've been up trying to get all this stuff done for about a week. Let me back that up. Did you see that? That's the volume divergence signal. That's what I'm waiting for. Why? Because this is a 20-minute setup, so I prefer to see volume divergence on the 5 and or the 2. I don't necessarily have to have it on a 20-minute setup, but when the market is screaming this strong to the upside, you've got divergence. It's looking like it's probably at the 4th or 5th standard deviation in the momentum here. So it's way, way, way overbought, but it's screaming to the upside. right? I have to wait when it's doing that. I have to wait for some sign of weakness and either a lower high or a slightly higher high on less volume. And that's that volume divergence signal. And it's right into that cluster of areas on all the different charts. So I have Blackbird on this 200 tick chart. I have a very low number of bars. I think it's like 650, 750 bars on this chart. And you saw the Bloodhound template that I'm running. I'm able to access all of those different charts using this one little chart with very few bars on it. I'm running this one calculate on bar close true. So it's only running the Blackbird stuff once per bar. And it's like nothing. I mean, you can't even tell that it's on the chart. Typically, when you're doing a strategy, the reason I'm kind of emphasizing this right now, when you're doing these types of tests in NinjaTrader 7, you're working with strategies, you're working with a lot of different conditions, trying to do this type of testing and using market replay and all of that. The heavier the strategy and all the stuff that you're working with, all the indicators and charts and time frames, the worse NinjaTrader performs. Okay, so like I said before, for me to be able to do something like this in the past has been impossible, completely impossible. But now that we're able to access all of the lines, all of the volume patterns, the volume divergence, the divergence from all those different time frames, it's you can't even tell that it's on the computer. It's really incredible. So this is that volume divergence signal on the 5-minute. There's actually one on the 2-minute here as well. And what I'm doing now, let me show you that. You see this? The name of that order is 45. That means I'm putting in an initial 45 tick target. And that one has a 15 tick stop loss. The second one has a 60 tick initial target with a 20 tick stop loss. Okay, I'm just going for, just to get the order in there, let the signal go. I've met all of my conditions. We're at multiple areas in the market geometry. I have the volume divergence signal. Get the orders in there, and then I'll come back. I'll change the colors of the lines on the 120-minute chart for the profit targets. I'll do the first one to a black line, second one to a cyan line, and then on the 20-minute chart, I'll manage the trailing stop just by recoloring a line to red, basically. So I can, figure out, okay, well, if the area that I'm trading is a down-sloping upper median line from the 120-minute chart, then I want to make sure that my stop is behind that area until I have a significant amount of profit. And then I can begin tightening the stop. You see my thought process here? So I want to get the order in there. I want to get into the trade. I don't want to have to worry about very precise profit targets and stop losses. I just want to get it in there because, these reversals occur pretty quickly. You don't have a whole lot of time to think about it. And then once I'm in, I've got the next 5, 10, 15 minutes to figure out where I want to try to trade all the way to for the profit targets. Okay, I put the stop. You'll see me color this line to red. I get that going first, and then deal with the profit targets after that. You see that? So I colored that red, right? This line. Okay, so the orders are at 46, and what was the other one? It's like 42 or something like that. So what's going to happen after, I think I have a delay of 10 bars. After 10 bars, those orders are going to tighten up to that yellow line. One will be 2 ticks off of it. The other one I think is 4 or 5 ticks off of it. Okay, so for right now, I'm just setting it to that one line. Here I'm setting the first profit target to this black line. The second profit target will trail that cyan line. So the profit orders that I've attached them to these lines, and they'll update with the values of those lines. So, nothing like this has ever been possible before Blackbird. Well, before Blackbird and our new signal reading system, right? Because I'm accessing the Bloodhound signal from the 5-minute, from the 2-minute. I'm accessing the volume independently from all of these other charts, and then I'm accessing the divergence from the 3 faster charts, the 5-minute, the 2-minute, and this 200 tick chart. You see that? The stop loss order from this black set of orders, order A, have now just tightened up. I think they tightened up because the market moved 30 ticks in my favor. So you can set all of these different rules based on, number of bar delay, number of ticks in favor of the trade, basically anything that you can think of. Jeremy has thought of quite literally every single possible thing that you might want to do. There's nothing in here that I've wanted to do that I cannot do. And, I've been working with this thing night and day for quite literally about 20 hours a day for, 7 days in a row, something like that, 8 days. So, yeah, I'm going on 3.5, maybe 4 hours of sleep for the past 2 weeks now. I'm sure you guys can tell in my voice, but it's been worth it to me. I mean, the capability that we're able to achieve now with Blackbird and being able to access all those different indicators from all the different charts this is really a dream come true for me. Even though I've been able to make money and consistently, I would have made probably 3 times that if I would have been able to trade to the area that I initially said I was going to, which would be, in this case, these 2 orders right here. First one being the first major area, second one being the big overall major area, right? If I would have held all the trades that I said I was going to, yeah, I would have made 10 times that. I mean, there's so many times that I have held where I've given back money, but those times where I said, I've been back and looked at it the past few days, and I'm trying to figure out, what I need to kind of add into Blackbird, because trying to assess essentially what are my major pitfalls, so going back over some of the orders and looking at some of the recordings of them. I'm completely random in my trade management. I have a set of rules, I have a trading plan, I know what I'm supposed to do, but when I get into that trade, I don't know, something takes over. Sometimes I'm able to hold the trade and it does go, and I do make that, 250 ticks or whatever, depending on the trade. And then other times I just kind of talk myself out of it and I get out early, and then that would have been the one that really moved. Or other times I hold in situations where I definitely should not be holding, and then I end up giving it all back. So even with all those different mistakes, still being able to make money, think of how much more I could have made if the trade management would have been completely the same every single time. No possibility of making errors unless, of course, you just completely disable the system. This is just incredibly exciting to me. I know you can't really hear it in my voice right now, but on Friday, hopefully I will have gotten some rest, and I'm going to show you some really incredible stuff with Blackbird. Blackbird it's exceptional. really exceptional. So here you see a volume divergence signal right here. Now what I'm going to do, what I'm going to have built into these different Blackbird templates, there'll be different, I would say 2 different Bloodhound Blackbird templates per time frame. So I'm going to make one set for those of you that just want to trade. Don't give me all this crazy multiple time frames, man. Just give me 2 charts or 3 charts and let me do it. So I'm going to do one set of easier workspaces with less charts. Uh, maybe one set with a little bit faster time frames, another set with a little bit slower, and then I'll do my typical 5, 6, or 7 charts. And I would say per trade setup, identifying which trade the chart is occurring on. For every one of those trade setup charts, there'll probably be 2 different Bloodhound templates and 2 different order management Blackbird templates. And then according to what type of a trade setup it is it really fast moving? Is it strong momentum, or is it a typical kind of a zigzag ABC long drawn out kind of a correction where you expect to see that volume divergence on one of the charts? So there will be some level, what I'm trying to get at is there will be some level of discretion involved in identifying which trade you're trying to go with. I mean, you could combine them all and then just, whatever happens, it'll put in the trade regardless. But you'll also be able to fine tune based on what type of a setup is actually occurring. All right, you see that? So that's the first target hit. And that first target also coincided with this typical thing that we see all the time, this type of symmetrical move here. But in this case, look at this. Yeah, that's a symmetrical move, but look at the size of that bar. You see this number right here? It says 99. This is something new that we've added to the volume. We're calling it the volume analyst because it has so many different inputs. All right, this one is the range input. Let me just show you that briefly, because it is pretty cool. All right, this is the range input here. I'll go into more detail about some of this stuff on Friday, but you see these numbers? It's probably a little small. Let me make it a little bit bigger. Range. I'll make them 16. All right, let me just show you this real fast. So for the volume analyst, you have all these different inputs here. You can do volume, relative density, range, relative range, or volume per second, all from the same instance of the indicator. Okay, with range and relative range, I completely redesigned this to look for wide-ranging bars, extremely wide-ranging bars, narrow-ranging bars, or extremely narrow-ranging bars, okay? And then you have variations of those. You have inside bars, and then you have outside bars, okay? So you can set the minimum look back here to begin looking for wide range, and the minimum look back for extremely wide range, or minimum look back for narrow range or extremely narrow range. So what this is looking for is it's trying to identify all of those bars that have a wider range than the past 7 bars, or a wider range in this case than the past 50 bars, and it'll go up to 99. So when you have a bar that is exceptionally wide ranging, of course you can access all of these inside a Bloodhound or a strategy or whatever. Any bar that's outside of that range will show as a 99 here. So what that's saying is this bar is wider, it's a wider ranging bar than the past 99 bars. Okay, we may actually open that up in the future to show, the actual number that it is. Maybe we'll let it go up to 1,000 or something. So with this, you can identify exactly the exact type of bar that you're looking for inside of Bloodhound and Blackbird. We're going to combine this in the next update with the volume, with the relative volume, to single out those bars that are only, extremely narrow or extremely wide-ranging bars. So this bar is a 99. It's larger than the past 99 bars, right? So do you think it's actually going to stop there? No, probably not. It's probably going to make it down to the target that I had. Yeah, look at it. Look at it go. So that's the target that I had on the 120-minute chart. You see the stop just tighten up? Let me show you that again. So here, I'm about to change the color of this midline right there. I just did it. I just changed the color of that midline to red. And when I did that, the stop tightened up. So if I, had to go to bed or whatever, the stop would continue to tighten up behind that red line. I think it's offset by 4 ticks. Okay. And again, the profit target is moving with every bar. So as that cyan line on the 120-minute chart is moving, is adjusting, the value of it is, so too is that profit target, you see. So guys, I'm completely beat. I think I'm just gonna go crash. I am exhausted. I was trying to get all this stuff done. I mean, this is the kind of the issue with setting deadlines for yourself. When it comes to development, you can set all the deadlines you want, it's done. I mean, all the stuff is done, and I have, I would say, most of the files done. But what I've been doing is working night and day on trying to make this stuff the best that it can possibly be. I mean, when it comes to I don't know, people call it a perfectionist. I think it's just OCD. I think I have OCD really, really bad. And I can't let something go until it's exactly the way that I want it. And it's finally just about exactly the way that I want it. So for those of you that are already members, it's not going to be available today. I want to say tomorrow, but probably Thursday, because we still have to finish some of the PDFs. I mean, I could, hand it to you, but you're not going to know what to do with it. So we've got to finish some of the PDFs and get some more of the training material done. Now, we are going to be training with this live all day, every day, but there are some, more kind of professional user guides and PDF instruction and videos and stuff that I really want to get done. So hopefully on Thursday, I'm pretty sure it'll be ready on Thursday. And then on Friday, we'll go into much more detail. I say much more detail. I'm going to be much more structured on Friday. I'm not going to talk in circles. I mean, I can hear myself talking, and it's driving me crazy because I'm not saying what I want to say, because I think I am just about to crash here any second. But at any rate, on Friday, we're going to go into some more examples, and we're going to try to go over some of my blunders and some of the different trade management that I've fumbled on, made mistakes, and show how now I'm able to actually program that stuff out inside of Bloodhound and Blackbird and eliminate all those mistakes. So round 2 is going to be more geared toward that, toward actually going over some of these mistakes. And I think I'll show you some of the live trades that I've taken in the room as well, but mostly going into greater detail about how Blackbird is able to eliminate these mistakes, how we're actually able to now automate a lot of these things that previously has been completely unautomatable. So this is the Ninja Manager. This is the last thing I wanted to show. I know it's getting late. Sorry, Ty. For some reason, I just talk on and on and on, but I want to show you this one last thing really quickly. This is a free program that we're giving away now. What this thing allows you to do is to open up any set of workspaces, connect to any data feed or two data feeds, delete your cache before you open it up. You could run Ninja 8, Ninja 7 at the same time. There's some tricks to your computer. What you can do is you can actually set it inside of the BIOS. You can set it to start up at a certain time, right? So you set your computer on a timer. Let's say it starts up at 4 a.m. You start up at 4 a.m. That will, in turn, you just have to do a little task. I'm going to show you guys how to do all this. You can set a little task in the task scheduler to open this thing up. Oh, I'm sorry, we don't have to do that now. No, we have this little button here. See, this is brand new. And we have all these new features. So you can launch Ninja on Windows Startup. So when you schedule your PC to start up at a certain time, when it launches, when it opens up, rather, it will launch this Ninja Manager with Ninja Trader. Okay, it'll delete the cache, the database, which some of you are probably neglecting to do on a regular basis. You need to delete that cache pretty regularly, otherwise you're going to have some corrupted data. So you can set that to delete once a week, once a day, every morning, whatever. If you don't want to start up the PC on a timer, you can set a schedule. If you leave your PC on all the time, you can start up Ninja on a schedule so that you do get to restart Ninja at least once a day, which is, obviously good to do. You can connect to two different data feeds. So if you're trading a live account like I am, you may have two different data feeds, one for your live data, one for the order routing. You can set 32 or 64. You can run high priority, which will give NinjaTrader, greater priority than the other programs that you have open. And again, choose whichever workspaces that you want open. So what it's going to do for you is it's going to open up all of these workspaces one at a time. All right, it's going to connect to the data feed first, opening up a blank workspace, so a clean Ninja environment, connect to the data feed, then open up these workspaces one by one, not opening the other until the previous has completely loaded. Okay, so this just ensures against your database getting corrupted. When you're starting up Ninja and you're connecting to data and you're opening up 4 or 5 workspaces at the same time, inevitably your database is going to get corrupted. But when you do it like this, it's much less likely to get corrupted. Plus, it just saves, all that time in the morning that you have to spend getting up and running. You can have Ninja up and running by the time you get to your PC. So it's not ready today. There's, I think, one bug that's left, but it will be available tomorrow, and I'll definitely have it as a free download for Friday. So again, that link to the Friday webinar is in the chat box. For some reason, I'm not able to see any of the chat. I'm sure there are questions.
Hey Daniel, when I send out the recording link tomorrow morning, I'll include the register link for Friday's event.
Perfect. Thanks, Ty.
No problem.
All right, you guys see any questions that I've missed? Looks like Clint has answered quite a few of them. Thanks, Pep. Thanks, Dob, Don, Frank. Thanks, you guys. I was kind of bummed about the presentation. I mean, I've put so much work into getting the tools done and ready that I kind of neglected the presentation a little bit. But on Friday, it should be a lot better. But, I guess the tools kind of speak for themselves, don't they? It's really really incredible stuff. This is what I've been working for so long to achieve is, I'm doing all of this for myself, first and foremost. I'm developing all these tools to make the analysis that I do so much easier. And again, this toolbar is probably the most sophisticated programming for Ninja next to Bloodhound and Blackbird. We've got built-in volume profiles that you can put on any chart. So Ninja gets really slow when you try to put, a profile on all these different charts that you have. With this one, we have our own method for doing the data. So we're accessing the tick file and then doing a hybrid database for the incoming ticks. So you've got the developing value. You can access all of this stuff inside of Bloodhound with the readers. Everything profile related, you can access in Bloodhound, Blackbird. Everything market geometry related, you can access. Any of the lines that you draw on the chart, you can access in Bloodhound, attach orders to the lines. There's so many features here, it's endless. We'll go into some of this when we start on Friday, because I do want to kind of show this thing off. It is incredible what we have here. It makes doing this analysis just so much easier. That's the main thing that I had an issue with before when I was trading without this toolbar. It's really difficult to trade more than one or two markets when you have to go here. You can use a hotkey, granted, but it's just really, it doesn't even compare. I can draw all of the trend channels and median lines and warning lines at the same time with 2 clicks, or I could click, I think it's 8 or 9 times to get the same thing with Ninja. So to do this type of analysis is, it takes some effort, but the reward is huge. The reward is way, way worth the effort. But it does take time. And to do this thoroughly and efficiently with more than just a couple of markets, you really need to have a tool like this to facilitate that analysis. And we've got the fibs. You can attach orders to those. You can delete them, whatever. So pretty cool. Pretty cool. The profile has really come a long way. We're going to remake it one more time to make it more intuitive. I redesigned all of this a couple of days ago. So the new version of that will be ready next week probably. And anyway, like I said, the features it would take me a day to go through all of the awesome stuff here. So, all right, guys, if I've missed your questions, I'm sure Ty's ready to get out of here. I've taken way longer than I should have. So for that, I apologize. I hope you guys enjoyed it. I know I went through a lot of stuff. We'll go through even more on Friday. I know it probably seems a little daunting, maybe overwhelming, but I can tell you one thing. I have a pretty solid understanding of where and why these major reversals take place. And when you can learn how to identify those major turning points, you can make money trading. I mean, that's what it boils down to, is knowing where the market is likely going to put in a swing high or low, anticipating that reversal. For me, that's what it's about. I know there's some momentum traders, and a lot of people teach that style of trading, momentum trading, but all of the back tests and all the modeling that I've done, momentum style trading, breakouts and that sort of thing, doesn't test so well. Not such good results. So anyway, with that, I'll see if there's any questions that I've missed, but I think Clint has probably answered all of them. Yeah, it is a little daunting, isn't it, Ira? But we teach it in the trading room every day, 5 days a week, and 2, probably 3 now, training sessions weekly. So Frank will go over the cost on Friday. I don't want to go into all of that yet. Once I give you guys, show you a little bit more of the details, and once we cover a little bit more about the tools, then we'll kind of go over all the pricing and the sale, basically the one and final, the last, and I can't even talk straight anymore. I'm about to pass out. The final sale that we're going to do will be from Friday until the following Monday. And that will be the last time that you'll be able to get all of this for such a low price. And beyond that, I can't really tell you how long the stuff is even going to be available. As soon as I make enough money to kind of keep it going for another year and a half, I'm just going to concentrate on trading from then on. Trading room will continue, though. I mean, I don't have a problem trading in front of people anymore. When I first started that, it was incredibly stressful, and it almost drove me crazy trying to trade live in front of an audience. But I don't know, it doesn't bother me so much anymore. And yeah, there'll be free upgrades for Ninja 8. So we'll go over all that on Friday. All right, guys, if I missed some questions, please shoot me an email. We're going to be working on Ninja 8 immediately. So now that we have everything done for Ninja 7, well, it's almost done. I mean, there's still a couple of more things that I want to get done with the toolbar. But now that everything is pretty much done for Ninja 7, we're going to move over to Ninja 8 pretty quickly, as quickly as we can. So, all right, guys. Shoot me an email or give me a call. I mean, if you guys have any specific questions or something that you want to address right now, you can go ahead and give me a call now. But I'm fading fast. I'll probably be asleep in another 2 hours. So if you have any important questions you want to ask, go ahead and give me a call. The email is support. You can use the dashes, but I should have corrected that. We have both sites now, so it's actually support@tradetheplan without dashes, but either email works. All right, you got that? Okay, well, you guys have the next link for Friday. Ty said he's going to put it with the recording as well. So
Yeah, I'll be sending out that link tomorrow morning to all the registrants of the event.
Awesome. Thanks, Ty.
No problem. Hey, thank you for presenting, Daniel. It's always a privilege to learn from you, and it was an excellent presentation, man. Don't be so hard on yourself.
All right, I appreciate it.
And all you traders, thanks for coming out. Keep your eyes open for the registration link for Friday's event and the recording from today's event.
Excellent. All right, thanks, Ty.
Yeah, no problem, man. Take it easy. Everyone,
All
take
right,
it easy.
good.
Enjoy the rest of your day.
All right, bye, everyone. Talk to you on Friday. Cheers.